This is David Patrick, Fitzstock Charts market video update for June 5th, 2019. The Nasdaq in an 18-day downtrend. And it's still heavy today after this gap up. We're going to talk about the current market conditions in a moment. One day doesn't make a market. We've talked about that a zillion times. You go back to 07, 08 when we were in bear market. And we've been in a bear market since we launched the service too, a couple times. And you see these huge 50 handle moves and you go right back lower. And I'm not predicting that. I just want to get that straight. You have to stay open-minded, even keel. As soon as you get on one side too much opinion, too much bias, that's when you make a big mistake. Now, we were looking at, I can't remember, 1954 or 7 historical chart pattern comparison that was really bearish. And I said, you have to keep an open mind because we can diverge from this. We could stay on this pattern for days, weeks, or months, or we can diverge. I don't know if we're going to diverge. But if we diverge, we're going to look at historical chart pattern comparisons that are bullish. I've said over and over again, we had the edge already this year. 44-day uptrend, 19-day uptrend, 15-day uptrend. That was when we had the edge. All the stars were aligned, the weekly, everything, moving averages. We had if that's not when you're going to make your money, I don't know when you would make money. That's why you have to identify this. So even if we go into an uptrend, let's call it either this week or next week, will this uptrend be as good as the last three? In my opinion, no. And we'll get to the technicals in a moment because the weekly is still bearish. So even if we go into an uptrend, there's money to be made. Don't get me wrong. But I don't think it will be as powerful as those three we had this year. We go into a 8-9 day uptrends, choppy waters, get knocked out, in and out, in and out. And don't get me wrong, there's a lot of money to be made in that. Just want to emphasize all uptrends are not created equal. And when we have the weekly confirmation, when you have price thrusting above the 50, the 10, the 200 SMA, and we're breaking out, or we're breaking down trends and bull flagging, that is when you hammer the market. Right now, even if we do close above the 10 SMA, we go into no trend, and let's say we go into an uptrend Thursday, Friday, or Monday, yeah, we have to get long. I understand that. Everyone should understand that. Just understand expectations of all uptrends are not equal. And expectations of this one, might be up to, 2870, let's call it, 70 more handles, or let's just call it double yesterday. Or we're up 50. So maybe another 50 handles. That 50 handles came in one day. The next 50 handles, if we even go into an uptrend, could be much more difficult than yesterday that was straight up. And the 5-minute rules of engagement for day traders is still working. I want to emphasize a few things. You don't have to short when we're in downtrends. You have to preserve your capital year-to-date gains. And you don't need to day trade to use the service correctly. It's just another supplemental way to use our rules of engagement because they work on multiple time frames. The Dow Jones 200 SMA, we talked about how important that is. We'll look at that. Our numbers year to date, 211 stocks have engaged off the ESFL with our suggested options. Right now, there's no on there that we haven't scaled. There's 20 of them that were stop outs and 191 that paid. That's a 90.5 win percentage from the ESFL. And it, once again, it's unheard of. So we're doing super this year. And congrats if you're listening to the tape, you're using the ESFL, and you're using rules of engagement because it works. It works every day. And yes, will there be losers? Yes. In fact, I always like to point out the bad too because there's no flawless system to trade. You have to have good risk management. But I will say this. Why is trading not easy for average retail traders? Well, discipline, risk management, emotions, opinions, and anxiety. Anxiety's it's an emotion that people can't get over. That's why the average trader feels like they have to trade earnings because when they miss Apple gapping up $15 after earnings, they can't handle that. Whereas if you use our rules of engagement and you wait for after the gap up, the bull flag, that's when we hammer it. So you don't need event risk. You don't need the anxiety of missing yesterday with swing long positions, 50 handles when we've gone down 150 handles when we went cash. So you have to get the emotions out of the market. You have to stay disciplined. And you can't have opinions. You can't have opinions based on anything besides the technicals, and just stay disciplined. Anyway, 90% Club 31 triplers year to date, 115 different options up over 90%, 1,058 since we launched the service. And it looks like the last 6 were shorts and they were puts. The Avgo was up 224%. All these up over 100%. You did not have to take those, but if you're aggressive, you got paid. And you don't have to be aggressive. Okay, I don't know why I have that one up, but let's flip to the SPX. I got to remember to go to the Dow Jones too. In fact, let's put it on right now before I forget. I don't always show the Dow because it's just not my favorite vehicle to analyze it. The S&P is so much more important than Dow, in my opinion. This 200 SMA is very, very important. And guess what? We're right at it. We're slightly above it right now. If we close above it and we go into an uptrend, I think that bearish pattern we were looking at is negated. And we'll start looking at, other, just to give you an idea. Well, first of all, here's our fib support before we get to a historical chart pattern comparison. Actually, this is not the fib support. That was my fib extension I was drawing. So we'll show you the fib support now. Let's see if I can draw that from these lows down here to those highs. And that 38.2 over here on the left is our first Fibonacci key support. We used 38.2, 50, 61.8. Well, we bounced right at it. That's a pretty bullish sign. So as bearish as this tape has been, with the weekly being bearish, and that's looking at that extremely bearish historical chart pattern comparison, we have to respect price, which is back above the 10 SMA currently, and respect the Fibonacci. And if that low holds, let's just, I don't like to be overly bullish or bearish, but let's just assume that that low holds the rest of the year. It's a pivotal low to trade from. So it's real simple. When we get long, if we do go in an uptrend, that is our worst case scenario stop. So if you're looking at the SPX and you get long at 28.10, your stop is 27.28. It's the risk. Your risk, I don't even know what is it. This is called 3%. You risk 3% to make new highs. So once again, as bearish as the tape has been, with the weekly confirmation suggesting lower prices, historical chart pattern comparison suggesting lower prices, you have to respect the current tape. And you have to say, hey, if we hold this 38.2 and we go in an uptrend, there is still more reward than risk. It doesn't matter what your opinion is. There's still more reward than risk. Just to give you an idea of a historical chart pattern comparison, this is not a great one either. I don't think there really is a great one like we've had earlier in the year. But when you look at something like, geez, I'm all over the map here, 2000, and this one is not identical by any means, but it's a similar price pattern. 2012, I think I had the Fibonacci retrace or Fibonacci extension up then. And let's see the S&P. Where's 2012? Oops, I'm going to blow it up a little more. Yeah, this is not identical, but you can see Death Cross, Golden Cross came down, broke the 200 SMA, came right back up. Or you could even say, here, whatever, either way. Right there, we did not go into an uptrend. But right here, as bearish as this tape was, and the weekly was bearish, by the way. We don't have time to look at that. But when we got back above the 10 SMA, what did we do? Nothing for about 4 or 5 days. Saw a 4, 5, 6, 7, 8 day uptrend, got knocked out. And this is the kind of sloppy move that could happen. This is why you have to keep an open mind. Before possibly, going to new highs. And as a predictor, I'm not a predictor. My opinion on the technicals and price is always going to be the same opinion. When we are in an uptrend, I'm bullish. When we're in a downtrend, I'm bearish. So if we close right here, we're in no trend. So it's hard for me to really have a bias, right? But when I scan and look for historical chart pattern comparisons, and this is just one of them, right in here, this happened after we didn't flush the 200. This, we flushed the 200, came back after trapping everybody short here, came back, and what did it do? Chopped people up for a while, eventually went to new highs. And I want to reiterate, just like I did when we were in that bearish historical chart pattern comparison, I wasn't predicting lower prices. I said, we're going to follow this analog until it diverges. And right now, if we do go into an uptrend later this week, I'm going to be bullish, and my price projection will be new highs, with worst case scenario, it'd stop at this pivotal low, which was a 38.2. I'm only as good as a market trend. I'm a market trend trader using our rules of engagement, which is a methodology with extremely high odds, which we've proven over the last, 6 years. Okay, so before we get to the rest of the market, we'll look at the weekly real fast. See if I can delete all this jazz. We might actually be able to see both 2012, just to give you an idea. What was that? Yeah. You can see right in here, I think that was June 2012, MACD bearish on the weekly. We go into a downtrend. We break this 50 SMA. And what do we end up doing? As this MACD took its time curling, we grinded and hit new highs without MACD, and then it happens, it's bearish divergence, you came back down. But those lows were pivotal. And that's why I say that I'm not predicting, but if this low holds, which just happens to be that 38.2 fib, that is extremely constructive. It's extremely bullishly constructive, if that even makes sense grammatically. So let's just trade the tape and the trend that's given to us. Let's ignore all the other biases, opinions, the CNBC, the news, the event risk. Ignore it all. Trade the trend we're in right now at 11 o'clock on June 5th. We are in still a downtrend. And once we close above that 10 SMA, if we do today, then we go into no trend. And then we see what happens. And we know if we do see a repeat similar to 2012, it still could be a choppy way back in higher, which is actually fine with me. I'll take these 44-day uptrends. I'll take these 12-day uptrends, these 22-day uptrends, and I'll take, if we do go on an uptrend, I'll take whatever it gives me, because that's when we know we'll make our money. And we also know we have busted uptrends now and then, like we saw right in here at the end of December, early January, where we're in a 2-day uptrend and it failed, and you get stopped. And then you just got to be ready to get long again, which was up here. So not all uptrends are created equal, but when this thing started going, the weekly turned and everything was showing we were going higher. So we will take this one day at a time like we always do. Okay, long intro, and let's flip to see what's going on with the rest of the market. Nasdaq to me is heavier. It looks like, I want to change this candles, which I like to do because I like bars. We're still below the 10 SMA. So if we close here, the Nasdaq is still in, what, a 19-day downtrend. And that obviously is concerning, but to me, the main focus is what? The SPX. Oil looks horrible, horrible. Death cross, golden cross, breaking the golden cross, bear flagging, price weakness confirmation, MACD at the lows since almost getting the low of the year. Oil looks very, very, very bearish, at least oil futures. XLE continues to look bearish also, rejects the 10 SMA, MACD looks weak. Got to remember, as bearish as things look, when they get oversold, they can turn on a dime. So don't fall in love with the short side. Financials look okay. In fact, they closed in no trend, and if they do close above yesterday's high, they go into an uptrend. So believe it or not, as bad as the financials have been this year, which to me they've been our worst performing as far as trading asset class, they don't look bad here. IWM, trading range. I mean, you could call this the bottom of the trading range and the top, and that's all it is. MACD bull cross is coming. It's not leading. There might be stocks in that sector that are worth a glance, but we're not just going to follow that as an ETF right now. IBB, above the 10 SMA, lagging. IYT, which is the real big concern because we broke that right shoulder. It doesn't matter. Came right back in, and The IYT is a leader, and if it closes here, IYT goes into an uptrend. And I'd be honest with you, that's all we need. That's all we need is the transports. Transports and banks, transports and something else small, transports and anything will lead. So this is a big indicator. You want to see those transports lead and go into this uptrend. We talked about Dow Jones and that 200 SMA, and we're right at it. That was the DIA or the UDOW. Gold. We talked about gold being bullish back in here, breaking a downtrend line. If you did long gold, it paid fat. TLT, we talked about this thing going to new highs. It's been new highs almost every day. It might take a break. It's had quite a run. Apple. Well, speaking of fibs, we came down to that 61.8. The last fib, we held it, and now we're bull flagging above the 10 SMA. So I think this could set up long with MACD bull cross. I just want expectations to be realistic. Apple is a great long in here, bull flag above a downtrend line. A long here. This is on the ESFL, I think 5 times this year. 4 of them are in the 90% club. This is not the same pattern as this, right? This is above the 50 SMA, above the 10 SMA, MACD breaking multi-month highs. MACD's real low here. We're still below the 200 and the 50. So to me, this one could be a sloppy grind, maybe back to 190. So just have your expectations realistic with Apple when it sets up here. Amazon bear flag below the 200. Yes, that is very concerning because Amazon is a big leader. Netflix in that same megaphone pattern we've seen for a while, not telling us a whole lot. Booking, it's just not a leader. Tesla hit that 52-week low, and now maybe it short squeezes because it's oversold. Facebook, someone had mentioned on Twitter, a subscriber, about volume and calls. Once again, I'm not a volume guy. Sometimes you're going to see exhaustion patterns on the way up with volume, exhaustion patterns on the way down with volume. Sometimes the volume shows up in the form of equity. Sometimes it shows up in the form of puts or calls. And you got to watch to see if they're bought on the offer or sold on the bid. So you really don't look too much into volume. The bottom line is Facebook has been in really a downtrend for a while. And technically, 205, it's in a bear market from its highs. And MACD's saying lower prices. So just be careful here. Can it squeeze higher back to 180? Yeah. But just to point out, when we long Facebook, what do we look for? You can go back to the 90% club because we have that on the website. We like patterns like this, right? Bull flag above downtrend lines. Bull flag here. That's when we get paid. This is still a bear flag, and it might go in an uptrend sometime later next week. Who knows? You have to be, as a trader, you have to be willing to miss these bottoms, because as soon as you try catching a bottom, let's say right here, that's when you get hammered, and eventually then you do catch a bottom one of the days. It's the worst thing that can happen, just like trading earnings and being rewarded, because you're going to go all in the next time because you think you have something. This is not how you trade. Okay, can this squeeze back to 180? Yes. Does it look good technically? Absolutely not. Google, bear flag. You do have an island, or not an island. You have a gap right here and a gap right there. The bottom line is that a downtrend? It's bear flagging. MACD's at multi-week or lows. Yeah. I also want to point out, because I'm watching the S&P, well, I don't want to say rip, but it's grinding. It's +8. In the Nasdaq, to me, some of these stocks are not participating. To me, that's starting to give us some more clues of what could happen this summer, where, to me, I still feel the easy money could be behind us, at least for the short term. And once again, even if we do go on an uptrend, I think it's going to be choppy, and you may see some of these Nasdaq stocks lag. And then we have to look at other sectors, whether it's the financials or whether it's the transports. Let's see here. NVIDIA lagging is at the 10 SMA, MACD bull cross coming. Texas Instruments sandwiched between moving average, Intel. All these could have short squeezes. AMD actually looks pretty decent. Out of all the chip stocks, AMD actually looks pretty decent. Avgo looks okay for a short squeeze. OLED, same thing. And Xilinx, this doesn't look too bad. You have your MACD bear cross. These new lows did come with MACD, not our A1 setup, but I could see this squeezing to 120. You know, that's what, 12% higher or something like that. So some of these are setting up for trades, which is what we do. That's what we do. We're traders. Microsoft, we're above the 10 SMA. MACD's just really low. I think some of these are going to take some time, multi-days, to really start getting a nice grind going. Adobe, now, Coop. Coop looks actually very good. And those new highs are coming without MACD, but Coop does look very good. Jobs, not doing too much. Team, yeah, it's starting to grind back up after. By the way, we did get stopped out of Team. The stocks that we got stopped out of this year was 20 of them. Still betting 90% of the year win ratio, but IBB, Goldman Sachs, Facebook, BlackRock, Vertex, Microchip, Rig, Nike, Kronos, JP Morgan, CME, Netflix, Amazon, Bank of America, Panama, X-Ray, Workday, Momo, JD, and Team. That's 20 stocks. That's not a lot, but once again, there's no flawless system. Team has paid us huge this year. If you go to 90% club, at least 2-3 times doubled. Last one didn't work, and that's why risk management comes in. You know, new highs were coming, and MACD was still strong, and the market pulled back, and Team pulled back with it. Can it reset up again? Absolutely. Will it? Yes. Will it pass again? Yes. Last time didn't work. And once again, there's no system out there that you're going to bat 1,000 with. 90% is unheard of. No, nothing. Believe me. By the way, you can go check. Nobody's even close to 90%. Nobody. So will we continue to bet 90%? Probably not. My goal is 75% win, which is still phenomenal. But as long as we keep using the rules of engagement, I think we got the odds in our favor. FFIV doing very little. Expedia, that's a bull flag, but we're at those moving averages. It's tough. Roku, our #1 trade setup, bull flag here, new highs. Payday, 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 price strength confirmation again. And that's what you get. We said it was going to 100. It went to 100. Congrats if you took it. That was a huge, huge payday. Baba, yeah, I mean, Baba and Baidu continue to look very, very bad. And that concerns me for some of the stocks in the Nasdaq that are in bear markets like we talked about. Even though Facebook bounced on high volume, that chart looks ugly still to me. And some of these Nasdaq stocks are very, very ugly. Let's fly through some more of them. Sorry about the long video. CYBR doing very little. Paul Alta, bear flagging. VMW, bear flagging. You know, these are leaders. Vive, you got divergences everywhere. We've found some really good looking charts. Vive is another one. I think that engaged off the ESFL today. That's a very good looking chart. And that's a bull flag breakout, our #1 price pattern. Vive is, congrats if you took that one. Twitter. Snap looks very interesting. It doesn't take very much momentum to a 52-week low for Snap. So we're going to keep an eye on that one. Looks pretty decent. What about GoDaddy? GoDaddy, Wix, those were big leaders. Looks like they're slowing down some. SQ, WB, Sina. Yeah, Sina and WB. Anything in China looks very bad. Let's flip to the banks. JP Morgan, bull flag, but you got that 50 SMA. It's a tough trade. Bank of America, Citigroup, BlackRock. None of them look. USB actually looks good. I had to pick any of them. The USB probably looks the best. Visa, MasterCard. We got paid on all these. ICE, CBOE, and we've been talking about CME for a while on this bottoming process that took place. And we got now all-time highs, I believe, on CME. And we talked about it, right? Head. You could say head, shoulder, head, left shoulder, right shoulder. You could say bull flag above a downtrend line. We talked about this over and over again. Once it thrusts up, what's it going to do? Either double bottom or create a higher low. It created a higher low, which ended up being a bull flag. Another entry long, another entry long, and all these price strength confirmations long. And MACD is confirming higher prices. CME looks phenomenal. What else do we have? CYOU. We haven't looked at that in a while. That one actually looks decent. So flip to oil, which is ugly. COP, PSX, Exxon. None of these look great. Schlumberger, Rig. 52-week lows all over the map. Just be very, very careful with that sector. You know, with the the S&P's up 11 handles now. Oil looks horrible, and some of these Nasdaq stocks are hitting 52-week lows. So you have to keep an open mind, because if you're just looking at oil and some of these Nasdaq stocks, you're missing out on opportunities in the S&P 500, or whether it's in the transports, or maybe even banks like we just talked about with USB, or maybe these exchange stocks like CME, ICE, and CBOZ. I understand we're in a downtrend. I understand if we close above the 10 SMA, we're in no trend. You can always take stocks from the ESFL, because I've filtered them to use our rules of engagement. They will be lower probability than in an uptrend, but you still have high probability, meaning let's call it 75% versus 90%. So if you want to take the trades, they're on the ESFL. If you want to day trade, we day trade every day with our 5-minute rules of engagement. If you want to stay cash until an uptrend, that's fine too. You have to understand that everyone has their own risk profile. The casinos, I don't really see too much going on there. Flipping to biotech, this sector looks just really boring to me, and I don't really see too much. I like transports here, select banks, those exchange stocks good. Some select tech that we talked about, I think it was Vive, Roku. We're going to look to Uber and Lyft here at the end. REGN looks very, very bad. I'm not going to go through all these biotechs because I don't think they're leading. CMG, UBNT, Twilio. I don't see too much there. IQ, DocuQ. Yeah. So let's finish with Uber, Lyft, and then the SPX. So what's Lyft doing? A grind. You could talk about maybe head, left shoulder, right shoulder. You really want to see it close above here. That candle's high is what? 62.99. Let's call it 63. Above 63, I think we get paid even more on this one. So it looks okay. Uber, to me, looks bullish too. We talked about what Uber was going to do. It was creating a wedge pattern, right? In here. Remember we talked about this? Go back and look at the videos. And we said, when you get to the point of this wedge, what happens? Almost always volatility happens, which means whatever way it goes, usually the opposite way it comes next. So if it was breaking to the upside, it was probably going to go down. It broke to the downside, and then it went up. So then we broke a downtrend line. We're both flagging above 10 SMA, and MACD is showing the highs of the year. Now, this stock's only been around for a couple of weeks, but this is a bullish price pattern. Whether we get paid on it or not, it's a bullish price pattern. So both Lyft and Uber look good. Uber did engage today, and we take it one day at a time. I think we had an opportunity to scale on it, and I posted that. So here's where we are with the SPX. We could draw downtrend lines right here, which we're above. And we can see, notice that this is MACD. So I would say if we close up 10 handles, that's a pretty good sign. Keep in mind, we looked at, and it's not going to be identical, that if we do go on an uptrend, what could we see? Well, we talked about, I did some Fibonacci extensions and some measure move things. And I thought we could go up to this 2870. Let's just call it the 50 moving average. Let's see if I can draw this. Yeah. So I personally think that we're going to be chopping around in this area. If we close in no trend, I think you're going to chop around this area. Above this 10 SMA, and with this 50 is going to be resistance. And I do think we eventually get up to, let's see here, that 61.8. Well, that 61.8 was just about the top of my box. So that would be, once again, all uptrends are not created equal. I don't think in the short term, meaning multi-weeks, that we're going to new highs. I do think if we close in no trend, then we do go in an uptrend. I think it's going to chop around, and I think we're going to be contained. This candle's high is 28.92. I think that candle's high at 28.92 is significant. I do think we stay below that, at least for the next few weeks. But I also think there's going to be opportunities. We're seeing it all the time. We saw it with Uber today. We saw it with Vive today. We saw it with the exchange stocks that were on the ESFL. There are opportunities. Just make your expectations realistic. Don't have your expectations like this right here. That was when the weekly was confirming. Weekly was confirming. Weekly was confirming. We already know the weekly is not confirming this move. which means it is going to be sloppier than our last 3 uptrends of the year. MACD is bearish, prices below the 10 SMA. You have conflicting indicators, that equals sloppy trading. So be realistic with your expectations. That's all I have on the market video update. Have a great trading day.